the weekly market update for the 13th of March 2013. We're going to stay with the update from last week because we had Cameron Cusher and we had Kate Gray on, and it was just an awesome summary of year to date of what the market's doing. So I'd like you to have another look at that, and let's rerun it because there's a lot of information in there, and I'm sure that it's absolutely worthwhile having a look at it again, and it's completely relevant and very much up to date. So let's go. So Cameron, talk to me, mate. I haven't spoken to you for a while. What is happening in 2013 in the real estate scene?
Okay, so in Adelaide, I guess that's what the most important stuff is our latest index results showed that home values are down 0.3% over the 3 months to February. But importantly, since the market bottomed late last year, home values have actually increased by about 1.5%. So there is signs of a recovery in the Adelaide housing market, although Adelaide does seem to be lagging what's happening in a lot of the other cities. Across the combined capital cities, values picked up by 1.2% over the past 3 months. So Adelaide's certainly lagging a little bit, but it is encouraging to see that there has been a bit of an improvement in values. In terms of sales volumes, if we have a look at the data which we've got now to the end of 2012, sales activity throughout the year was pretty much on par with sales activity in 2011, down 0.2%. But it's interesting, unlike most other cities, the first 6 months of 2012 actually appeared to have a greater number of sales than the last 6 months. So quite interesting there, but generally across the nation what we're finding is a pickup in sales activity, and I would expect, given that we've had fairly stable interest rates and obviously consumer confidence has been improving quite a lot over the last few months, that we will start to see a pickup in sales activity in Adelaide through the early parts of 2013.
Cameron, in terms of days on market and the average discounts, what's the rundown on that? You've just put the figures out?
Well, it always spikes at this time of year, but encouragingly over the last 6 months of last year, we had been seeing a lower trend in both the level of discounting and the time on market. So it means that vendors are setting more realistic prices on the properties they're trying to sell, and subsequently they're selling quicker. As I said, it's always a little bit seasonal at this time of year, and there is a bit of a spike. But again, with improving market conditions, we'd expect that both those measures will improve over the coming months further.
Cameron, just to clarify, and this is really for my sake, but for everyone listening as well, when you say days on market, that only covers it if it sells, if it's withdrawn, unsold, they don't get into the figures, do they?
No, that's right. So it's only those properties that sell, and I guess that's an important point to make because I guess it's more reflective of properties that are priced accurately and vendors are willing to negotiate on the price to get it sold.
So if they change agencies, that's irrelevant, that's still picked up on?
That's right. So it's all captured from the first time a property is advertised for sale. So generally speaking, if we haven't seen it for 6 months, it's considered to be a new listing, but if it changes agency, that doesn't have any impact on the results. Unless
they took it off the market for 6 months?
Exactly.
Right, okay. Now, the average discount, I mean, that obviously varies a lot, but when you say average, that's what they literally mean, isn't it? So there are people, because I've seen some much bigger discounts than those numbers.
Yeah, that's exactly right. We see some significant discounts in certain parts of the market, but the average across Adelaide is what we're measuring, and we're only measuring it across private treaty sales as well, so we don't include auction results in there because really that's more of a marketing period than an actual for sale period.
And you're considering the discount from the initial advertised price or from the final advertised price?
No, from the initial advertised price. So again, we're tracking everything from when it's first listed to when it ultimately sells to give a true measure of what's happening in the market.
Right, and just anecdotally, we're finding it really good at the moment. We spoke off air, but now we need to speak on air. This is a trend happening right across the board, isn't it?
Yeah, that's exactly right. We're finding similar conditions across people we're talking to in most other states. Obviously, if we have a look at auction clearance rates, which are a good lead indicator of what's happening in the market, they're up much higher than they were last year. Across the combined capital cities last week, we had a 63% auction clearance rate, and at the same time last year, you were looking at a clearance rate of just over 50%. And that trend's again reflected in Adelaide. Typically, we've been seeing auction clearance rates up over 40% for most of the first part of this year, when last year they were sitting around 30 to 35% at the same time. So clearly there is more demand out there. People are getting out there and buying homes. The amount of stock on the market's lower than at the same time last year, so things are moving, but probably not as quickly as everyone would like them to be quite yet.
Now, everyone always wants to know if we've bottomed out. It feels like we've already bottomed out. It felt like that was maybe August, September last year. What's your feeling on it? Gut feel?
Yeah, as I said, home values are now increased by 1.5% from their recent low, which was August last year. So it does appear that the improvement in the housing market is going to be maintained in Adelaide. Obviously, I don't think that the market's going to rebound like it did back in 2009. It'll be a slow and steady recovery, but it certainly is feeling like in Adelaide and in most parts of the country, we have reached the bottom, and we are starting to the slow steps to recovery, keeping in mind that home values in Adelaide are 5.5% lower than they were at their peak. So even to get back up to historic high levels, we've still got a way to go.
Cameron, the doomsday is out there. There's been another report recently about the fact that Australia prices are way overpriced, Adelaide prices are overpriced, still got a room to collapse 20 or 30%. What do you say to that?
I still say that's not going to happen. I mean, if you have a look at a lot of people get their publicity doing these sort of things, coming to Australia and preaching the doom and gloom story. The simple fact of the matter is about 60% of the population live in one of the 5 largest capital city housing markets in Australia. People want to live in the major capital cities. Yes, it does seem expensive, and you do have to pay quite a bit to get into a lot of these markets, but I think people really just need to readjust their expectations, and this is why we're seeing a growing popularity in unit-type product. For the first home buyers, it's either get into the market in that cheaper unit product or go to the outskirts of the city where property prices are a lot cheaper. I think the problem is that a lot of first-time buyers, their expectation is that they're going to be able to live in the same sort of location as their parents do, and that's just completely unrealistic.
Now, Cameron, you're too young to have children, so let's say your mother, and I've asked you this question at previous times, you're sitting around the dinner table, she says, you've only got a little bit of money, darling, what should I do with it? Would you buy property at the moment, or would you hang on to the cash, or would you buy some shares? What would you advise your mother?
I wouldn't put it in the bank because you're not going to get any return on it. I do think there's some good opportunities in the housing market at the moment. I think that particularly inner city units, older style inner city units are offering some good opportunities in the housing market at the moment. Obviously the share market has been quite strong as well, so that could be appealing, but you've got to do one or the other, and my preference would be for the housing market rather than shares.
Now, Cameron, I've got Kate here. I need to ask her the same question, Kate.
What would I invest in? I'd have to say I would be looking at a unit in a city.
Okay.
Yeah.
Good rents.
Good rents. If you buy something new off the plan, you are eligible for NRAS, which is a great scheme that will subsidise some of your rental for over a 10-year period. So, yes, and you don't have the maintenance on property, so I'd probably look at something relatively new in the inner suburbs of the CBD.
And Cameron, for the investors out there, should they upgrade, buy extra property? What would you do if you're an investor at the moment?
Well, there is a little bit of activity coming back into the investment market if you look at the ABS housing finance data. And again, I think there's some good opportunities there. I just think that the one piece of caution I would have to provide to investors is you're probably not going to see the same level of capital gains in the housing market as you have over the last 10 or 15 years. It's probably likely to be slower and steady pace of growth. But there are some good opportunities there. And a lot of inner city unit product is providing quite a nice yield at the moment and seeing some strong rental growth in areas. And then some of the outer, more affordable housing and unit product, which is located close to either public transport or close to major working nodes in the outskirts of the city, are also yielding quite nicely. So there's some good opportunities for investors in the market at the moment.
And very quickly, the States property market, seems like things are starting to pick up around the world at the moment. Well, certainly in the States.
Yeah, in the US, housing prices now picked up for each of the last 7 months, I think it is. So things are looking a lot more positive there. Obviously, We're not getting the daily bad news out of the US and Europe like we were, at the same time last year. So I think economically, things are really improving. GDP growth over the past year for Australia has been quite, at average levels. That came out today. So overall, we're in pretty good shape. But obviously, the recovery is still going to be fairly heavily influenced by consumer sentiment, which is going to be swayed by what people are hearing in the media and what we're hearing emanating out of the US and Europe.
And an election, mate.
And the election, yes. The 8-month election campaign as well we've got to deal with.
We need a change of government. That's what we need. Anyway, we won't get too political, but it would make a big difference, I reckon.
Yes, I think I don't think that's going to affect too many housing markets, but I think somewhere like Canberra, for example, is going to be probably the market will slow down quite a lot there because people don't know what the future holds, particularly for those people working in the public sector.
Cameron, that's been fantastic, mate.
No problem. Thanks for having me, Anthony.
And that wraps up our weekly market report.